Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, there are two major concerns which fixed income investors are worried about. Number one, the size of a proposed US stimulus package. Investors have now started to believe that the proposed 1.9 trillion relief package would be much smaller and, more importantly, delayed. And number two, slow global rollout of a coronavirus vaccine. AstraZeneca, which has developed its vaccine with Oxford University, told the European Union that it could not meet agreed supply targets by the end of March. With stimulus size and timings in question and the issues with vaccine rollout, USDINR closed 5 basis points down at 1.05 and 30-year also closed 5 basis points down at 1.80 percentage points on Tuesday. As we had warned you, 125-130 seems to be the upper cap for yields in the US market, and yields have retreated from 115 itself. Germany 10-year bunds are now trading at minus 0.53 percentage points. In the crude oil market, for the week ending January 22nd, the API American Petroleum Institute reported a draw in crude oil inventories of 5.2 million barrels versus analyst expectation of a mere 0.43 million barrels. With such a larger unexpected crude oil inventory draw, crude is at $56.05 per barrel. Market seems to be range bound, and the range is $54 to $57 per barrel. In the currency market, dollar index or DXY is at 90.21. DXY's today's range seems to be at 89.93 to 90.63. USDCNY or Chinese yuan is at 646. USDINR with a low of 72.89 closed at 72.94. USDINR has managed to close below 73 levels for many consecutive days, but the trading range has been very small to make any significant money. In the domestic market, on Monday, the market sentiment was positive with 10-year benchmark, but the shorter end saw consolidation. 515 GS 2025 closed at 533 versus 530 the previous day. 577 GS 2030 closed at 595 versus 594 the previous day. Now let's do 25th January 2021 SDL Auction Analysis. 4-year Rajasthan at 539, 4-year Pondicherry at 546, 6-year Chhattisgarh at 610. Yes, you heard it right. 6-year Chhattisgarh at 610. 10-year Gujarat at 657. Rajasthan at 661. Himachal Pradesh and West Bengal at 663 and UP at 664. The 10-year SDL yields have increased, but the rise is very modest. UP is now at 664, which used to be at 660. No major movements in a 10-year as participants are awaiting union budget. From tomorrow, we will be bringing you the budget expectations and the potential impact on your portfolio and the yield path going ahead. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.